What if the transaction is non-cash? So if it does not involve any cash nga transaction, there's no debit to cash, there's no credit to cash, then it's not part of the statement of cash flows. So non-cash investing and financing transactions, although they are non-cash, it can be disclosed elsewhere in the financial statements, either in the notes to financial statements or in a separate schedule or in a way that provides all relevant information about these transactions. So for example, here are some items that we can disclose. These are non-cash transaction. You buy an asset, and you credit a liability, there's no debit to cash, there's no credit to cash for this one. So therefore, this is non-cash. But you can disclose this one. Asset is acquired by issuing shares or issuing bonds. So since wala man tayo debit nga cash, wala tayo credit nga cash, so it's non-cash. But you can disclose this transaction. Or you convert the bonds payable to share capital. So you just debit the bonds payable and you credit the capital. So there's no cash involved. So that's non-cash. Or you convert from preference share, you debit the preference and you credit the ordinary share. Wala may na debit nga cash, wala na credit nga cash. So that's a non-cash transaction. But you can disclose this one. What will be the treatment for interest? So if it is an interest paid or an interest received, the general rule is it is an operating cash flow because these enter into the determination of net income or loss, especially if the interest is arising from a receivable or a payable that's related to the revenue producing activities of the entity. But alternatively, okay, another option would be the interest paid may be classified as financing cash flow, not an operating cash flow because it is a cost in obtaining financial sources. So for example, nakautang ka long-term debt or bonds payable and then magbayad man ta og interest. So, 'di ba ang interest is coming from a long-term debt and remember bag long-term siya nga liability, 'di ba under man siya sa financing, so pwede po siya i-classify as financing cash flow. Interest received if it is a return on an investment wherein nag-invest ka in debt securities. So, since the interest is arising from an investment activity, so it can also be classified as an investing cash flow. But if it is a financial institution, interest paid and interest received are usually classified as operating cash flows since the main revenue producing activity of a financial institution is ang pagpautang. So, meaning, mo ni siya ilahang main product, so operating yun ng ilahang interest. Next is you have the dividends. So, how do we classify the cash transactions related to dividends? So, as a rule, according to PS 7, dividend received is an operating cash flow because it enters into the determination of the net income or loss. But another classification allowable would be as an investing cash flow because it is a return on investment. When you invest in the form of shares of stocks, you will be receiving dividends in return. So since investment in stocks is an investing activity, so pwede po nga ang dividend nga na-receive coming from that investment is classified as an investing cash flow. If it is a dividend paid, as a general rule, it's a financing cash flow because it is a cost of obtaining financial resources. Okay? So when you issue the shares, 'di ba? Pag mag-issue tag shares, that is an equity financing. And we pay for dividends coming from those investments made by our shareholders. So, financing man to siya nga activity. So, financing sad ang cash flow. But alternatively, so this is allowable, you can also classify it as an operating cash flow in order to assist users to determine the ability of the entity to pay dividends out of the operating cash flow. But in general, so that we will not be confused because there will be problems that will provide for these items. So if the problem is silent, you are going to use the general ruling kaning naka-red. Okay? So you are going to classify it according aning mga red items. And then for the income tax, so cash flows arising from income taxes shall be separately disclosed as cash flows from operating activities unless you identify it as investing and financing. Tax cash flows are often difficult to match to the originating underlying transaction, so most of the time they are classified as operating activities. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.